In this video, I would like to discuss equity method of accounting for equity investments or equity securities. Equity method is used when a company has either 20 to 50% share of stocks in another company, or can exercise significant control or influence over that company. So let's take a look. On January 2nd, 2020, or year one, Maxi Company acquired 48,000 shares, or 20% of Mini Company. And again, the 20% is the cutoff line between fair value and equity. So in this case, you will have to go with control or influence. So again, we assume that the control or influence is significant. Our cost was $10 a share, or $480,000. Very similar to the fair value method, your equity investment will have to be recorded at cost, or whatever we paid for it. In this case, $480,000. Now, from now on, equity investment account serves almost like a barometer that tells you everything that is going on with your investee, or what kind of changes are in the equity of that investee. Because in our situation, we're not a trader. We're not chasing the market. We're not speculating if the stocks will go up or down. We bought our shares with the goal in mind to influence or control that company. For the year 2020, Mini reported net income of $200,000. And we know that in that case, 20% of that income is ours. I will go ahead and draw that equity share that we used to have. And remember, about 20% is ours. And in this case, when Mini reported net income, you know that net income will be close to retained earnings. And retained earnings is part of equity. So as a result, equity in Mini just grew by 200,000. So I'll try to write 200,000. And remember, if you look at this little cutout that I did, this is our share, 20%. So you can see that my share just grew by how much? By $40,000. So I will go ahead and record just that. I will increase my equity investment. Again, that's the account that tells me all the changes within the equity of my investee. And the credit side will be investment income, or sometimes you will see it in the various books as revenue from investee or income from investee. That's your typical income account that shows up on the income statement. Let's take a look on the next transaction. On December 31st, 2020, so that's your fiscal year end, the 48,000 shares of Mini Company have a fair value of $12 a share, or $576,000. Remember, we're not here to chase the market. So as a result, we will do nothing when the market value changes. That's very important to remember. Let's step in the next year. On January 28, 2021, Mini announced and paid a cash dividend of $100,000. If you recall, please, that the dividends are paid out of retained earnings, okay? And as a result, your equity, retained earnings, and then equity will be reduced by exactly that $100,000. So I'll go ahead and draw another circle inside and showing this change in blue of $100,000 that happened as a result of reduction in our equity. Well, again, you see this blue part? You can see that my share in equity also went down. As far as dollar amount, it's still 20%, but the dollar amount went down. And my equity investment account will have to show exactly that. So 100,000 and 20,000 of that is mine will have to be taken out of equity investment, and we will still record the fact that we did receive cash as part of those dividends. I know this journal entry looks abnormal. It feels like we partially sold it for cash, but it's not what we're trying to convey. We're trying to say that equity, in fact, went up by a net amount of $100,000. If you look at it at first, it went up by 200,000 right here, right? And then we gave away as part of dividends $100,000. So the net increase was 100,000. It's exactly this little part between the black line and the blue line. And 20% or 20,000 is ours. Let's take a look. 40,000 in equity investment increase, 20,000 decrease. So overall my net increase was $20,000. That's exactly what I wanted to see. In the year 2021, Mini reported also a net loss of $50,000, and my share of it is 20% or $10,000. I will have to pick a different color because now I want to see in green that we also suffered a loss. And if you remember, net loss will be closed to retained earnings, and retained earnings is part of your equity. So as a result, my equity account will have to shrink yet again due to loss. So again, this green line shows exactly that decrease. 20% of it is mine, or $10,000. And investment loss will have to be debited. So investment income versus an investment loss, these two are similar accounts, just opposite, income versus loss, but they will be reported on your income statement. And again, fiscal year end, shares did change the value, but I'm not going to record that. I'm not just chasing the market. So the big takeaway that I always recommend for my students, I'm going to pick it in yellow color. If you remember, every single journal entry, in fact, will have to have equity investment account affected. Unless you have market changes at the end of the year, then there's no journal entry. But other than that, equity investment shows up in every single journal entry to reflect the change in the equity of your investee. Thank you for your attention.